there might only be 6 months left to get rich in crypto. Because look, if you've missed the boat to retirementville up to this point, or you're still dreaming of that carefree island life, we could have one great opportunity left. The next 6 months could be the final shot to get rich this cycle as market patterns signal a potential explosion in crypto and risk assets. So let's break down the key indicators that could transform your financial future. But don't miss out. The window won't be open forever. So let's begin with the most important event in crypto, the Bitcoin halving in the 4-year cycle, which up till this point, knock on wood, remains valid. Although if the global M2 analysts are correct, we pump even longer. Then we get a Q2 2026 top, the 4-year cycle is broken. But that's for a different conversation. Look, every 4 years, the reward for Bitcoin mining is cut in half, reducing the rate of new supply. Historically, this event's been followed by a massive bull run as demand continues to increase over time while supply continues to decrease. When I say supply being reduced, not that there's less Bitcoin, it's just that there's less Bitcoin coming into the market from miners. The 2012 halving and parabolic rally in 2013, the 2016 halving set the stage for the legendary 2017 bull run. The 2020 halving was followed by the explosive 2021 rally, and right now, right on schedule, the 2024 halving took place in April of last year, setting us up for a 2025 market peak. Here's why timing matters. Bitcoin typically peaks around 500 to 540 days after a halving event. I know we have a small data set for that, but still, up until this point, it's proven true. For instance, after the third halving on May 11, 2020, Bitcoin hit its all-time high of $69,000 548 days later. The last one happened in April 2024. The 4-year cycle pattern holds. If it does, we're potentially looking at a market top somewhere in Q4 2025, about 6 months from now. In other words, it's not too late, but tick-tock, because time is running out.
But Lark, this cycle's different.
Yeah, I know. There's a lot of things to say the cycle's had some different points coming in. There are always variables, but the 4-year cycle has so far worked. It's not been broken yet. I suspect it's possible it could be broken this cycle, but hasn't happened yet. Let's see. Now let's step out of crypto for a second because the real threat to this cycle isn't coming from the blockchain, it's coming from the broader economy, which is basically showing, well, there's a lot of room left to run. This is the reason why the tariff news, any tweet from Donald Trump is hitting the market so hard. So we need to look at the US and global business cycle, which actually says there could be a lot of fuel left in the tank for the cycle. Now, according to Fidelity, we're in late stage expansion phases for the business cycle. Before we talk about what a late stage business cycle looks like, guys, if you're trading the cryptocurrency markets, you're trading Bitcoin, you're trading Ethereum, you're trading Solana, you're trading dog coins, hot altcoins, whatever it might be, check out Femex. It's a great place to be trading coins. OG crypto exchange. They've been around for years. I've been trading over there for years. And guess what? This is an exchange that meets you where you want to be because it's available to everyone everywhere. Okay, no KYC required when you use the link down below. You might need a VPN depending on where you live, but for most of you guys, just be able to sign up, no KYC, no VPN. Some might need a VPN. Anyway, you can use Femex to long the rips, short the dips, deep liquidity in all the big pairs. And right now, they got some insane trading and deposit bonuses. In fact, up to $30,000 freaking dollars. Yes, $30,000 freaking dollars. It is that insane. You got to bid some pretty big deposit bonuses and some big volumes to get that 30K, but it's out there for you, man. I know some of you guys are trading real hardcore out there. May as well get your free money. And that's up to it. It means there's all kinds of reward levels leading up to that as well. So go check it out. Link down below. Get your rewards. Start trading over on Femex so you can trade the way trading's meant to be, freely. Okay, so late stage business cycle expansion. The good news is we're still in the party phase, but no party lasts forever. Beneath the surface, cracks start to form. Historically, this is the part of the cycle where markets keep going up until they don't. A slowdown, a rate shock, a geopolitical jolt, something like that happens and everything goes to crap. That's all it takes to trigger a downturn. When the expansion ends, risk appetite disappears, stocks correct, crypto crashes, we have a recession, and according to Fidelity's report, major economies like Japan, Australia, the UK are going to feel the pain sooner than the USA. This is why the next 6 months are really critical. The party's still going, but the music could stop without warning. By the way, we're at basically the bottom of the business cycle right now, and it could actually go for a lot longer than this. Again, giving credence to the theory of like a Q2 2026 stop, just FYI. Let's talk about the ISM, the manufacturing index that tracks US manufacturing activity. It's a vital signal for risk assets like stocks and crypto. Above 50 means expansion, below 50 means contraction. Check out this chart from Trade Economics. The latest official data for April 2025 shows the ISM dipping to 48.7, down from 49 the previous month, signaling a slowdown, but very, very tiny. Still contracting though, ever so slightly. It's fine. The S&P Global PMI, a similar index, jumped to 52.3 in May 2025, beating the 50.1 expectations. Now, this is the strongest improvement in business conditions since June 2022. By the way, that's big. Take note of that. Guys, did you hear what I just said? This is bullish for markets. But as always, there's a caveat. The latest report also shows the manufacturing input costs rose at the sharpest rate since August 2022, while service sector costs rose at the fastest rate since June 2023. This means the cost of production is getting higher. It might take 3 to 6 months for all that to really start reflecting in CPI readings. For now, all good. And if inflation starts going up, the Fed, of course, will be forced to do the unthinkable and raise effing interest rates again, or just simply leave them higher for longer, which would be bad news for risk assets. In fact, the market's now starting to price in, the prediction markets anyway, are pricing in that we might not be getting any rate cuts anytime soon. Now look, we wish politics and our dog coins didn't mix, but that's the reality of things, okay? Those in power shape the future of markets, and markets respond to those movements. The US government's 180 on crypto is proof. We've gone from Biden's choke point 2.0, which stifled and literally tried to kill the crypto industry, to a rabidly pro-crypto White House under Trump, who wants crypto capital of the world to be USA. His policies like deregulation, a potential Bitcoin reserve, a new SEC head that wants to approve altcoin ETFs, all that stuff are fueling optimism with Bitcoin hitting another new all-time high this month. That's a tailwind for risk assets as well. Now check out this graph here from Moomoo. Since 1993, the S&P 500 has averaged 15.92% gain in presidential inauguration years like 2025. We're halfway through the year, and this historical trend could push crypto and stocks much higher into the fourth quarter. The global M2, as we always like to discuss, I know. Get the wife and kids. Get the wife and kids. We're talking about the M2 guys. The thesis has not changed. Liquidity is needed for the market to reach new highs. We're getting liquidity. We're following liquidity up. Okay, liquidity is the rising tide that lifts all boats, and we are on schedule. One of the proponents of the global M2 lag, of course, Colin Crypto. Go check out his channel. If we look at this chart, the global M2 has reached new highs, and that means based on the 82-day lag, we haven't yet seen the peak of this bull run. Whether we like it or not, the bull market will end at some point. My guess, we have a local peak, 150K, something like that in July, August, September correction, big one, and then a final rally into the end of the year, into Q1. Look, I can always be wrong, I frequently am, but we still have several indicators saying we've got a lot of fuel left in the tank here, from being at the bottom of the business cycle to the M2 expanding and all the other stuff. And retail's not even here yet. Bitcoin just made a new all-time high. Google Trends look like this. Get the heck out of here. It's ridiculous. Ridiculous. Thanks for watching.